Welcome to the XRP podcast. I'm your host, Andrew, the XRP Maximalist. This is an audio show featuring XRP news, interviews, and conversations with members of the XRP community and developers building on the XRPL, as well as tutorials and educational content for anybody who wishes to learn more about blockchain technology, cryptocurrencies, and of course, XRP. If you want to interact with me or influence the show with your suggestions or ideas, you can also find me on Twitter at XRP Podcast with no spaces. This is a project made out of pure love and appreciation for the people who are influencing the lives of others with their work on the XRPL, but also for all who are interested in joining the community. Thank you and enjoy the show. Ripple is an industry leader in providing enterprise-grade solutions for payments and remittances, leveraging blockchain technology and the XRP ledger technology. They are part of the Digital Pound Foundation, a non-for-profit focused on the development and implementation of a digital pound in the United Kingdom. Not only that, Ripple is also partnered with the country of Bhutan's central bank to pilot payment use cases for their national currency, the Ingultrum, by producing a digital Ingultrum. Ripple's also got its hands in the Republic of Palau. Ripple is partnered with Palau to develop not a central bank digital currency, but a US dollar-backed digital currency and a corporate registry for the country on the XRP ledger. Countries big and small, along with the banks stationed within these many great nations, are lining up in droves for Ripple and XRP technology. And you can't really be surprised. After all, Ripple has over 10 years of experience in blockchain and building global payment systems. The XRP ledger was created by them. It's carbon neutral. It provides 3-second payment speeds. It's infinitely scalable for global use, and the fees for a transaction are less than a penny. Who better to listen to and learn from than these tried and tested leaders in global payment solutions? Ripple is an organization that is actually building the future of global payments and the next evolution of money with central bank digital currencies, also known as Cbdc'S. The company has a bright future ahead, and as of January 26, 2022, they've announced a $200 million share buyback, which will place Ripple, the company, at a record high valuation of $15 billion, despite currently being under lawsuit by the United States Securities and Exchange Commission. The San Francisco-based firm knows what they are doing, both on a technical scale and a legal scale. This is an audio recording of the Central Bank Digital Currency Whitepaper by Ripple, the company actually developing and defining the laws and regulations around digital currencies, cryptocurrencies, and our interactions with all forms of digital assets. Ripple, the future of CBDCs, or central bank digital currencies, and why all central banks must take action. As part of their remit of continuing to evolve money and payments, central banks around the world are beginning to explore, test, and implement some form of central bank digital currency, also known as a CBDC. There's a growing number of reasons for the momentum behind offering sovereign-backed versions of private cryptocurrencies. Through the power of blockchain technology, financial institutions are enabling seamless, instant global payments. Each central bank will also have its own motivations for pursuing a digital currency that will be driven by specific market challenges and opportunities. The nature of that primary goal, whether it's overcoming limitations of existing payments infrastructure, promoting financial inclusion, boosting competition, or fostering innovation, will determine the approach and technology of each central bank digital currency. It is likely that we will end up in a world of diverse central bank digital currencies, which makes interoperability critical. Though most central banks are focused on solving domestic problems, the global nature of trade and finance means cross-border coordination must be baked into the original recipe of each CBDC. The internet became a global tool for the exchange of information because the world agreed to build it using common standards. Likewise, central bank digital currencies can adopt open payment protocols and use neutral bridge assets to facilitate a frictionless exchange of value across borders. Without this crucial interoperability, central banks will be putting limits on their CBDC success while compromising the future of their financial system, instead of developing a more effective and inclusive evolution of money. Key findings. The trend for declining cash use has been accelerated by COVID-19 as more people shop online and opt for contact-free payment options. 1/4 of U.S. consumers used cash less often since the pandemic began. Facebook's announcement of plans to create its own digital coin prompted fears that it could undermine the traditional global financial system. 2.4 billion users is the potential global reach of a Facebook-backed currency. China is also testing a digital yuan payment system that could potentially threaten the US dollar's position as the global dominant reserve currency. February 2022 is the proposed launch date for China's central bank digital currency. Section 1. Introduction to central bank digital currencies. What is a central bank digital currency? A central bank digital currency, or CBDC, is the sovereign equivalent of private cryptocurrencies and digital assets like Bitcoin, Ethereum, and XRP. It would be issued and controlled by a country's central bank and used by people and businesses for retail payments, much like cash but in a digital form. CBDCs will also be used for wholesale settlements in the interbank market. CBDCs are the future of fiat. Central banks issuing their own digital currencies is a natural evolution of how we exchange value. But that does not mean that CBDC development should simply follow the old pathways. Our existing currencies were created in a much less globalized world and are not designed for efficient exchange. While most markets are exploring CBDCs that solve specific domestic challenges, each central bank also needs to implement a holistic strategy that enables their CBDC to interact in the global market efficiently and ensure it can scale and evolve to meet future requirements. There are many benefits to CBDCs, but the main benefits include the following. They enhance existing payment infrastructure by increasing the speed and efficiency of payments while reducing costs and failure rates. CBDCs also promote financial inclusion. They increase access to financial services for the under- and unbanked populations and enhance direct person-to-person payments. CBDCs also encourage greater competition. This is by reducing barriers to entry and boosting access to global markets through interoperability. By using CBDCs, you're also fostering innovation. Through the use of advanced digital features like smart contracts and programmable money, that will be the basis of new financial services. Most importantly, they ensure the ability to maintain control. It ensures central banks retain sovereignty over monetary policy and not allow alternative currencies to dominate the market. There are many countries actively exploring central bank digital currencies. A map shown on the Central Bank Digital Currency Whitepaper, which can be found at ripple.com, shows a subset of these countries, which includes not only Canada, the United States, the Eastern Caribbean Currency Union, Brazil, Uruguay, South Africa, Australia, China, Thailand, Singapore, Israel, Ukraine, Switzerland, Sweden, Norway, the United Kingdom, other regions and countries within Europe, Iceland, and so much more. These countries are in various stages of their CBDC or central bank digital currency development cycle. Many countries are just in the early research stage or advanced research stage of CBDC development. This includes countries like the United States as well as South Africa and Australia. However, there are countries in the advanced research stage like Canada and the United Kingdom, while there are also countries currently creating their actual prototype for their central bank digital currency, like China as previously mentioned. Section 2. The main barriers impeding central bank digital currency success. Despite the many benefits that central bank digital currencies offer, most central banks are understandably cautious about pursuing real-world initiatives. Everything from how people pay bills and buy groceries to how businesses are run and transact and how governments are run depends on a stable financial system. CBDC initiatives raise many challenges for central banks, who must balance the desire for transformation with the need to maintain stability on a global scale. The need for control versus desire for innovation. Most existing digital assets are based on decentralized blockchains, where every transaction is validated by a public network of hundreds, often thousands of validators. Central banks will not be willing to relinquish control to a completely distributed model, as they need the ability to direct and influence their economies through currency management. While a fully centralized model would provide the required control, central banks would miss out on innovations like programmable money and smart contracts that blockchain technology enables. It would also reduce the ability of private sector players to access and collaborate with CBDCs. In addition, central banks are typically focusing CBDC approaches, solutions, and technologies on achieving specific domestic goals. However, many stakeholders interested in using CBDCs will have other needs as well as global requirements. If central banks do not enable the broad access, enhanced native functionality, and interoperability that will allow their currencies to be adaptive and scalable, they risk losing control of the infrastructure for global digitized services. A quote from Christine Lagarde, President of the European Central Bank. If central bank digital currencies are cheaper, faster, more secure for users, we should explore it. If it's going to contribute to better monetary sovereignty, better autonomy, we should explore it. If it's going to facilitate cross-border payments, we should explore it. Connecting across borders. The vast majority of CBDC initiatives are focused on domestic use cases, and in a 2019 Bank of International Settlements, or BIS, survey, central banks rated cross-border payments as amongst their least important considerations. This may be due to the fact that typically central banks are not part of cross-border payment flows and do not have the infrastructure to deal with related functions like transaction monitoring and know your customer (KYC), anti-money laundering (AML) checks. Having its CBDC circulating in foreign jurisdictions will also impact a central bank's monetary policy and liquidity management. Yet it is extremely short-sighted to overlook cross-border requirements just because these requirements come with additional challenges. In our globalized world, consumers and businesses will inevitably have a need to transact with foreign suppliers and vendors. Central bank digital currencies that are interoperable with each other will give those countries a competitive advantage, much like how being part of a trading bloc benefits member nations. It will take a lot of effort to harmonize the global frameworks and standards that will enable CBDCs to be successful for cross-border payments. It's critical that central banks start working together to resolve these issues now, rather than leaving a bigger problem to fix further down the line. While many private digital assets make a virtue out of anonymity, the ability to identify a central bank digital currency's users will be a fundamental requirement for central banks. When the US government was struggling to get much-needed stimulus checks to citizens and businesses during the height of the COVID-19 pandemic, fintech advocates noted that a central bank digital currency would have made it much faster and cheaper to pay people directly. However, it would have also required robust identity infrastructure to ensure that each payment was transferred to the right person. Many other benefits of central bank digital currencies require ID certainty and the ability to clearly connect users and transactions will be a key condition for central banks. Some private cryptocurrencies are already beginning to grapple with some of these issues, and central banks will need to build on their efforts to create interoperable ID solutions that work globally. One of the bigger drivers of financial inclusion over the past decade has been the rise of financial services from outside the banking sector, such as remittances providers and digital wallets. These services are pioneering new offerings and alternative experiences for traditional banking users. Current fiat currency capabilities limit the effectiveness of monetary digitization and compel end users to transact in the private cryptocurrencies that central banks often view as a threat to financial stability. Central bank digital currencies will help retain those users while boosting financial inclusion and enabling governments to make direct payments to citizens effectively, especially those who are unbanked. This will require central banks to provide non-bank participants with greater access to core payment systems and infrastructure than they currently offer. They will also have to start understanding the potential impact of this change on the role of commercial banks as gatekeepers to these retail customers, in order to ensure the continuing stability of the entire system. Ripple estimates that by 2024, at least half of the world's population is expected to use digital wallets for transactions that will be valued at more than $9 trillion annually. Section 3. Bridging the gap in innovation. The 3 keys to overcoming every central bank digital currency challenge. The first key is interoperability. For a digital asset to have any utility to people and businesses, it needs to coexist and interact with other payment schemes in that domestic market. The next level of interoperability for central bank digital currencies is the ability to work for global transactions. Without seamless cross-border functionality, most central bank digital currency projects will significantly underachieve their potential. Just as the global internet thrived by early agreement on common protocols like TCP/IP, which is also known as the Internet Protocol Suite, also the Hypertext Transfer Protocol, also known as HTTP. And another example is FTP, known as the File Transfer Protocol. So too should central banks start coordinating on central bank digital currency standards to cover basic functions, including transaction-level operations such as escrow and hash time locks, identity and addressing schemes, and flexible routing to determine the most efficient ways of transmission. This will allow CBDCs to connect with other domestic services as well as each other, thereby enhancing their utility, lowering transaction costs, and reducing barriers for new market entrants, while allowing each central bank to retain sovereignty. For an even greater level of interoperability, central banks will need the ability to actually exchange assets between ledgers, rather than issuing instructions via an API. The key will be for all central banks to enable cross-issuance of central bank digital currencies on interoperable ledgers. Each individual CBDC can create its own rules and policies that best suit its domestic market. However, CBDCs should also be united and guided by collective protocols that will enable them to cooperate seamlessly with other central bank digital currencies and digital currencies. Such a network of networks will allow independent CBDCs to also operate as a unit and make cross-border value exchange faster, cheaper, and more reliable for businesses and consumers. It means pushing the idea of interoperability further than many central banks have yet considered. But without these shared standards, CBDCs will be as inefficient and expensive a way to exchange value globally as existing fiat currencies. Ripple believes that every CBDC will need to have some basic level of interoperability built into it from day one. The second key to overcoming every CBDC's challenges is public and private partnerships. The infrastructure supporting the existing financial system is vast and varied and not likely to be redundant anytime soon. Central bank technology cannot replace what we already have, which is why a layered architecture model, where new systems are built on top of existing infrastructure, makes the most sense. A major benefit of layered architecture is that central banks can call on the expertise of the private sector to implement CBDC infrastructure without compromising the integrity of the rest of its system. Many reputable private companies that have developed successful digital currencies, their technology, and experience can help central banks get initiatives up and running faster and more effectively than starting from scratch. A central bank digital currency could be issued and managed using a private version of an existing decentralized ledger. While blockchain transactions are typically validated by many public validators, central banks could restrict this ability to a handful of trusted partners, such as commercial banks or the different member states of cooperating unions, like the European Union or the Eastern Caribbean Currency Union. This would give central banks the flexibility and functionality that comes with decentralized ledgers, while retaining enough centralized control over their monetary policies and economic management. The third key to overcoming every CBDC's challenge is neutral bridge currencies. While interoperability will support the direct exchange of a CBDC in domestic transactions, many of the old issues with cross-border transactions will remain. In particular, supporting immediate real-time foreign exchanges as opposed to the current 3 to 5 day process will still likely require the need for pre-funded currency accounts. Like any commercial bank or global business, central banks will want to avoid the increased costs and risks associated with this familiar liquidity issue. They would also welcome the ability to free up capital that could be generating value elsewhere and skews the financial system in favor of the most liquid currencies, typically those of the most powerful nations. A neutral bridge asset can support healthy, alternative liquidity markets that will allow for frictionless and cost-effective value movement between various CBDCs in real time. It would also enable the exchange of less liquid CBDC pairs and increase global competition by lowering entry barriers to new and smaller market participants. To enable a truly efficient global market, a bridge currency must be specifically optimized for payments and support the same speed, scalability, low cost, and security that CBDCs will provide. One example of a neutral bridge is the digital asset XRP, which can also be used to bridge two different currencies quickly and efficiently. By underpinning an effective alternative liquidity market, neutral bridge currencies are the final piece of the interoperability puzzle that will drive the success of CBDCs as a global tool for exchanging value. Ripple really wishes to drive the point home that a neutral bridge asset such as XRP can support healthy, alternative liquidity markets that will allow for frictionless and cost-effective value movement between various central bank digital currencies in real time. Section 4. Closing. The time to define the future of money. The introduction of Cbdc'S will be one of the most defining transformations in the history of money. How the underlying technology is implemented and monetary policies are set over the coming decade will determine whether sovereign-backed digital assets open the door to enhance global trade and financial inclusion or maintain the siloed, inefficient, and inequitable status quo. Today, some central banks are moving faster than others when it comes to piloting programs and implementing initiatives. But the future success of central bank digital currencies will require a global consensus rather than relying on a few pioneers with their own agendas to lead the way. The world's central banks must come together to agree on common CBDC standards and protocols that will enable interoperability, while also drawing on the existing knowledge and infrastructure of the private sector to accelerate initiatives. Central bank digital currencies have enormous potential, but must first overcome numerous challenges. Now is the time for central banks to explore these issues, develop common solutions, and ensure that the next evolution of money benefits more people and businesses, and not only that, but truly makes the world better. There are many wonderful insights and opportunities to be discovered from Ripple's report. My wish with this podcast is to enlighten all those with ears to hear and faith to put behind their action. I just want to thank you all for listening to the podcast. Once again, I am Andrew, the XRP Maximalist. If you would like to connect or would like to join me on the show, you can reach out on Twitter at XRP Podcast. Before I sign off, I would just like to thank the businesses that make this show possible. Go Quality Home Services of Ottawa, Canada. They provide commercial staffing, cleaning, painting, renovations, and more. They are the capital's most trustworthy and quality-focused agency and service suppliers in all of the National Capital Region. I would also like to thank A+ Painting, also situated in Ottawa, Canada. When you go with A+ for residential or commercial painting, you get a quality paint every time from people you can trust. No job is too big for the team at A+. Not only do they get the job done, but they exceed expectations every time. Anyways, that's it from me. Until next time.